Exercise 220 is another one of those problems that takes you from journalizing the transaction to the to the T accounts and then ultimately to the trial balance. It's very similar to 219. Let's jump into it and get started. On September 3rd, they paint some houses and they get paid $20,000 on account. So that's service revenue of $20,000 and accounts receivable, $20,000. Okay, credit accounts receivable, credit service revenue, debit accounts receivable. On September 8th, they purchased some equipment for cash. So it's $21,000 debit to equipment, $21,000 credit to cash. Now on the 12th, they purchased some supplies on account for $3,500. And again, remember, this is an account payable. This is an ordinary bill. There's no contract involved. You're not signing an interest-bearing note. It's just a regular business transaction. So we purchased supplies for $3,500. So we debit the supply account for $3,500 and we credit accounts payable for $3,500. Then on the 15th, we pay our employees $4,200 for the current month. So we pay them $4,200 salary expense, a debit, and a credit to cash, $4,200, because that's what we pay them in. And again, like we talked about earlier, even if we write a check for business purposes, it's still considered cash. On the 19th, we paid some advertising that appeared in the current month. So this is not from last month, which would make it a payable, or next month, which would make it a prepaid. It's a current expense right now. So our advertising expense for right now is $1,000 debit to advertising expense, $1,000 credit to cash. Rent, again, it's the same deal. It's the office rent for the current month. So that would be rent expense of $5,400 and cash of $5,400. Then on the 26th, we collected some of the cash that we had earned earlier. So we're collecting some of the cash from this guy up here, and we collected a total of $15,000. So that's a debit to cash of $15,000 and a credit to accounts receivable for the same amount. And then last but not least, on the end of the month, we got $6,000 in advance for a house we're going to paint in the future. This is a liability. This is a credit to unearned or deferred revenue and a debit to cash. They're the original journal entries. We're going to now take those and do the T accounts.